All right, so just reviewing the market, and today I'll also review the ES futures because they have some opportunity. So anyway, so here's what's going on with the SPY. We had that initial breakout. This was, I think, the end of the year or right after the New Year, right? So we had that breakout, and again, this thing always repeats. We have breakout. If it has follow through, then it's legit. If it doesn't have follow through, you don't know if it's going to work out or not. So anytime you have breakout, you have follow through. Follow through is what legitimizes a breakout, by the way. So without that, a lot of what you'll learn is, okay, breakout is legitimized by price and volume, that the volume is legitimizing the breakout, right? That's what we're taught. But it's not just the volume. It's actually the follow through and the trend. Because anytime you have an ABC pattern that's corrective, it typically has a breakout or a breakdown. But that's actually bullish. Or, you know, if it's with trend, that breakout or breakdown is valid. If it's not, then it could either be climactic or it could just fail. So remember, so bottom line, trend plus volume plus follow through. And of course it has to have good range. And that's about it. So that'll help validate the breakout. And also one more thing is, right before the breakout, you want to see a consolidation. So for example, over here, you see all of this juice, all of this consolidation. That also helps legitimize the breakout. Why? Because before a breakout, you typically have accumulation or distribution. So what does that mean? It means that because market cycles, they work accumulation, markup, distribution, markdown, blah, blah, blah. So that breakout initiates markup. That markup can be in the form of entire trend, but a lot of times it can just be a swing. So, or a couple of swings. So that's why you want that accumulation base before the breakout, or some overlapping bars before the breakout, because that'll really be an accumulation. Anyway, I'm not going to get into all of that, but the point here is that this breakout legit comes back, breakout has something in the background, overlapping bars that you want to see. It's overlapping bars because accumulation is always within a range of prices. And then over here, you have this breakout, not a lot of juice in the background, but then it moves sideways and then breaks down. You see this background right here, this cause? This is the cause that legitimizes breakdown, and then you have all of this. Now, what's worrisome about this for the bulls is A, the cause, but also, I mean, it's pretty damn clear that the market, you know, this is the first rally, right? From that cause, this first rally breakdown. I don't know why there wasn't more volume on the breakdown. I don't know why. But, I mean, I'm watching this because I want to see if there's going to be a pullback and another rally down. So that's interesting because, I mean, it might pull back and test, and there's going to be a short opportunity for sure. So, I mean, they're hungry wolves here, ready to short this, because they know that if it goes up, all of this trap, you know, it's not easy to absorb that. So it's going to react because, you know, selling pressure from all of these guys who basically went long on this pullback right here. They went long here. Why? You have this breakout right there, right? So what happens is when it broke out, they went long right here, causing the green bars. See this green bar? And the test of the breakout, a lot of folks went long. And then it broke down against them, so they're trapped in this area. So as soon as it comes back into this area, they're going to exit their losses, right? And when they exit their losses, plus new shorts, they'll create enough selling pressure for some type of reaction back down. So you have a lot of juice here, right? And it hasn't been tested yet. So see me see where the profile says it's all the way up here, but there's this volume here. Yes, yeah, exactly in the pivot in this area. Anyway, so let's take a look at the nice and NASDAQ. So and market breadth. So 1969 down, only 305 up, which set up the springboard, which initiated the down move, pulls back on about 799, and then 1066 down. Now over here you have 1048 reacting up. So I'm not sure what that is right now, but I don't think it's enough to turn trend. 1048 will not turn trend. All right. As you can see from the background, what turns trends like 1600 plus stocks, etc. Right, and you see how the down move was initiated right here by about 1969, so about 1969. So 1048 shouldn't turn trend, so it's fine, especially if it's under 1500. Rarely will that turn trend. Anyway, at least on the NASDAQ. All right, and you see that it's being confirmed by the market breadth on the New York Stock Exchange, 1607 down, 217 up. This is down pressure. There's no way this thing is going to turn trend to go back up. It might pull back, but it won't turn back up. There's not enough pressure, not enough participation to turn trend. So we're in that downtrend. So I mean, whoever buys this, you'll see as soon as it goes back up, it's going to sell off. All right. Okay, next let's go to the ES. All right. So on the ES, have the daily on the left-hand side, have the 180-minute, basically 3-hour chart, and then 5-minute chart, and we'll see where the opportunities are here. So initially. And it's really straightforward. I mean, you just have a level. Then it goes to the level, right? You look for a turn. All right, 1 second. All right, so you're gonna look for a turn. Just look for a level. Goes to the level, then there's a turn, and then take a trade. That's it. All right. So I'm gonna analyze this leg here. From 3-hour chart, from this high all the way down, right? So you see the initial breakdown right here where it says BO. That's the breakdown, had follow through, and it didn't pull back to test, which is interesting because, I mean, it was so weak, it basically supply absorbed that demand, broke it again here on this BO, then it broke again. The breakdown, and it's so weak, it can't bounce. See that? But you have a lot of space up here. And then finally it broke down again. Here it tried to break, but they reversed it. It tried to break a second time, they reversed it again. It tried to break a third time, they reversed it again, and finally it broke. All right, so if they tried to go down, tried to break, didn't, tried again, didn't work. Third time, and finally it went to a new lower trading range. So now what are you going to do? You're going to look at a test of that breakdown. That's it. And when it tests, you want to see what happens, the behavior on those tests, you know, and what you see. So here's the low, I mean, not the low, but the pullback. As it pulled back, look what happened. Change of behavior, right? Test, then you have your springboard or LPSY or feathers weight or whatever you want to call it, and the confirmation lower low. I'm expecting lower prices now, right? You have your, I mean, look at this big red here. Isn't it obvious? Right there at a level, crack, pull back, weak, down she goes. All right. Now the counter trend on the breakdown was also here. It's right now. Initially there was heavy volume over here, but then came the real volume, which is this big white right here. See that? So you had buying pressure up here that actually just tested, and then a puke fest, and then this volume here, 593 preliminary buying came here on 111,000 contracts, and that alerted me to that there's a change of behavior. And then it went a little lower, and then the real pressure came right here. Where is the LPS, right, or the springboard? It's right here, right there. Why? Look at that, 62,000. Now what you need to do is compare the ratio of 62,000 to 593,000, and you realize that 62,000 is nothing more than a low volume pullback. What is it saying? It's saying supply has evaporated. And what happens after that? It goes up. It goes up until it tests the initial breakdown caused here. And selling pressure comes in, tap, tap. And now it's going to break. I think it's going to break. It's not enough buying pressure to... The selling pressure is still there. The buying pressure is still not enough to change trend. But the selling pressure after this big red here is very weak, 2,000, 2,000, 4,000. So I hope it doesn't, do a retest. And instead, basically the demand runs out, which it is, 176,000. After that, how much? Only 9,000. After that, only 4,000. So you see that it's weakening. So now the bears can come in and break it to go lower. Anyway, long story short, that's how it's done. So that's how the Wyckoff approach method works. All right, take care.